Very good morning, friends. I'm Nalnakshi Swami, welcoming to my channel Smart Index Edge. I thank you all for your support in my previous videos. I want you to support me like this because I'm bringing up with the genuine content and I need your support and thumbs up so that it will motivate me for making more videos like this, so that it will be helpful for you all in trading. As usual, I'm making this video based on the India VIX. These are the very important levels for today's trade based on the India VIX. India VIX has cooled off on Friday 30 to 13.59. You can see the India VIX graph over here. It started from 13.94. Around 1 p.m. or 2 p.m. it bottomed out and again it climbed up. So this was the low reading on Friday at that point, and India VIX has climbed up while closing. But the final reading was below the day's high, 13.59. Based on that, I have calculated the levels. On the upper side, these are important levels for the intraday, 24,175. On the lower side, 23,833. And weekly levels to be 23,522 and weekly high to be 24,456. So coming to the analysis, if you go on seeing the price patterns, this price, I was mentioning in my previous videos, we need a candle like this. Such a big candle like this to negate all this negativity in the market. So this is a huge big candle negating everything. When market goes like this, imbalance will be created in the market. You can see that is a huge imbalance. So this is natural process for the market to price to come down and retest these levels to prove itself and find a strong foot, and find more participants in the market. Now at present, if you go back and if you see in the previous price action, this candle, this is an institutional candle and this is also institutional candle, negated all the negativity here. 1, 2, 3, 4, 5 days of negative price action, it popped up from this level. This is nothing but the big money can do market shift. There was shift in the market sentiment from negativity to the positivity, and the following day there was a gap up and you can see the price action there. It came down and retested those levels. Okay. And finally, there was no hiccup. You can see in the price action, it moved swiftly and consolidated again, and it is coming back. This is the usual process. Market goes up and comes down, retests those levels and finds its feet firmly. That means it will take more participants in the market and people come forward, and then market tries to move upwards. The only positive thing in this price action is market has come down, it has gone up, gone above these levels, come back and retested these levels and making an higher low in this area. Now, a market shift happened in this negative area and market is trying to retest. At present, this is very important level. 23,825 is a very important level. This is the flip level from where red has changed to gray. Positivity. Sometimes what happens, even sometimes market will come down and dip into the red area, negative area, and again gather momentum and it will travel further. That is a natural process as long as the price Nifty is within the 23,522, it is positive. It can move forward. This is a natural process. Coming down is a natural process and it is within the territory. For today's trade, 23,833 is very important, and even the low of 23,775, where the average price is placed. If I anchor the volume weighted average price, this is VWAP, anchored VWAP. See, you can see the average price is lying around 23,674. If I go back and if I anchor the VWAP from this level, it is just retesting this level. And the resistance is, these are the standard deviations. So I have enabled this to know the volatility. You can have guidelines like Bollinger Bands, standard deviations. So it is near. So you can see the market has come down. I had anchored at this level. I'm getting the. So wherever you want your point of interest, if you anchor, you will get the weighted average price. Now, if I anchor from this bottom, I'm getting the average price to 23,741. So within this price action, if the market holds and turns around, a bullishness will return into the market, and the incoming days we can see up move in the market. This is how you need to analyze the market. You need to see the price and you have to trade it. So simply after seeing going a red candle, you should not jump into continuation of the negativity in the market. You have to trade as it comes. Coming to the Bank Nifty for me, so based on, I've calculated the levels. First support is around 50,625 and first resistance is 51,135 for the today's trade. What has happened in the Bank Nifty is it tried to move away from the negative area. It could not successfully go to this area. This is the negative area. It has not crossed that level. 51,949. If it would have crossed and closed and if it is coming back, then we could have considered positivity in the market. But what has happened here is you are seeing after this negative move, there was a liquidity sweep and then market came down. Market made an attempt to cross this level, this entire negative level, but it is coming down. It is a huge candle closing negatively, retesting this level. For Bank Nifty to be positive, it has to retain these levels, 50,875 to 50,625. It can, even if it comes down to 50,725, if it moves down, and it should not go past these levels, 50,486. Today's price action is very, very important for the Bank Nifty because it is a huge negative candle coming within this range. So if I take the Fibonacci tool and if I measure the move down, that is 0.618. So in between 0.786 and 0.618, if it takes support, that is very good for today's trade. So Bank Nifty looks more bearish for a daily today's trade rather than Nifty. Nifty can find its fate anywhere between 23,833 to 23,754. So you closely and keenly watch those levels on intraday for your trade. Suppose in the early hours, because the market has come down, if you see, this is the boundary of the Friday's level. It is within the Friday's range, and it is an inside bar formed within it. So sometimes inside bars will continue down like this. There is an order block over here. It will come down like this, and it will show some sort of reversal in the intraday. So you can anticipate intraday reversals. So this pattern may continue. This is the pattern which is going on. Sorry. Let me remove this. If I'll take an arrow mark, no, not this. I'll take this. If I take this and bring down this, and the final move comes to 23,941. From there, market may show some sort of, you may get confused. An intraday, it may retest this level and some sort of reversal like this. But after showing this reversal, intraday play will be a little bit tricky. It can come down like this. The final, so you need to wait for these levels, 23,833 final level. If it comes within first hour or first 2 hours, then you can anticipate for a reversal. Otherwise, today may become another trendy lower day. Market may trade like this. So it may hit this level first, 23,921, and it can rally up to 24,076. Then it can reassume its downward move to 23,833, but still within the positive range of the Friday's move. Okay, friends, consider all these things and trade wisely. Do not get confused by the intraday up moves or intraday low moves. So you need to mark the market very properly and then you have to trade. Before signing off, one more analysis, one more cross check let us make. From this level to this level, I'm anchoring the volume profile, fixed range volume profile. These are the high node area. Probably market may react at this level when it comes to this level, and it may go up, it may face resistance. And the high volume node area, high volume level is present around 23,742, and this is the value area, 23,781. So I don't say this, see, these are the guidance for your trade. And you can see the volume is clustered around here. and the volume is clustered. The more participation you can see in the market in this level. So high node volume area is over here. From there, market has climbed up. This is a positive area. From the positive area, market gathered momentum with this high volume. So high volume participation of buyers are there, clustered over here around 23,740. So if you have all this in your mind, you can trade very well. Because intraday becomes tricky because it goes down and up. So you will get confused with the direction. The direction is at present, and intraday it is downward. So intermittent up move, you can have a clear view. These are the immediate resistance, 24,130 to 24,107 is an immediate resistance for today's trade. Thank you very much, friends. Naranakshi Swami signing off.